Hello everyone. Today in this video we'll be talking about support and resistance. So everyone should pay close attention. I think the previous concepts are clear. I won't go over them again. The concept for uptrend, downtrend and sideways market, and we that was in the first video, and then in the second video we discussed how much time the market spends in each phase, and we found out that the market is most of the time sideways. Thus we have the most important concept, that is the support and resistance. So actually the concept is very simple. As the name suggests, that resistance is where the market is not able to go up. Then let's draw an imaginary line, and the market is just keep on doing like this. So that becomes a resistance, and this becomes the support. Now the concept in itself is very simple. It's self-explanatory, but a lot of people have problem identifying these levels. So let's see how we do it. So the basic concept is that I told in the first video itself, is that we look for a move first, a down move or a up move. The first point, okay, remember this, the first point where the market turns in an uptrend becomes the resistance. Simple concept. And the first point where the market turns in the downtrend becomes the support. Very simple. When we have an uptrend, let's say the market is moving in a good trend, and then we have a good correction, not this small dip. If the market is moving like this is not a correction. This correction is something when we have a good move. Then this point becomes resistance. Then the first point where the market reverses, not a small something like this, when a market turns and not able to breach this point, and then it comes back, now this point becomes the support. Very simple concept. So this is our basic principle or concept what we follow in support and resistance. Nothing more complex. Now the support and resistance is more visible when we have touched it multiple times. So if we have a move like this, so let's say the market moves something like this. So now this is clear that this is our resistance and this is our support. So there is nothing more to this concept. We just have to identify a trend. So let me show you an example, and this is a Vodafone Idea chart behind me, and we have traded this. So I recommended to buy this chart at 5.25, around that level, at this level. So what was the reason behind that? It was simple concept of support and resistance. So let's track the chart and see how the support and resistance works. So when we had this down move, so this is our point of support. Simple, because the market turned. So this becomes our point of support. Now it turned till here. This becomes our point of resistance. Simple, very simple concept. Now the market just kept trading between these levels. When we had our breakout to the downside or breakdown, we got some move to the downside, almost how much? 42% move. The stock was very low at this point, so the move is not looking much. but it was 43% move. Then this becomes, so this becomes our new swing. Pay attention. Now this was the initial down move. First turn, this becomes support, resistance. This becomes support. Very simple. Then the market came down. Now this becomes our support, and this becomes our resistance. Then we had another breakout, and then we reached till here. So this became our resistance, and the market came down to this level. This became our support. As you can see, we had another breakdown with this candle, this huge volume. Then we kept going down again and again. Now the market came till here. Now this became our support, and the reverse level, this became our resistance. We had another breakout, but this was short-lived. We went up but couldn't close above the previous support, which was this line, and it turned again. So it could not go below this previous support as well again, and then we had this sideways market. I hope you are able to follow this. It's a very simple concept, that the first point where the market turns, and then the turns from the correction, this is our support and resistance. It's very simple, nothing more complicated. This is our support and this is resistance, and this is support. Very simple. So with the market, as long as it is trading it between these levels, it is a sideways market, and it is trading below resistance and trading above support. If we have multiple touches to the top side and the bottom side, it proves our levels even more accurate. Even if it is not touching, those support and resistance are as accurate as the resistance and support which are being touched multiple times. So then, what was the point of recommending the stock here? So let me do one thing. Okay. So let's say the market started from here. So we had this initial up move, and the market reversed here. I think everyone can see this much clearly. So this is our support, and this is our resistance. So now the question comes from time frame, that do I use this wick or do I use this wick or not? The question is time frame dependent, because if I go to a smaller chart, then you can see it has been breached. So the chart always works on the time frame which you are using. So on the daily chart, we could not close above the resistance. So the resistance is still valid. We have two touches. Then we came down, and we are at the support. We came down again, and we finally breached. Now the market came down till here, then respecting this support, because at this down move, this became our support because the market turned from here. Now the market went up and then went up again, but couldn't close above the previous resistance, because now this resistance became support. So another very, very important concept is when support becomes resistance and resistance become support. I'll explain this concept in the next video. For this video, just assume that it happens. So the move is something like this. Oh God. This is our move, something like this. So we have our support here, we have a resistance here, we had our short-term support here, which was breached. Now this support became resistance. Here it was support, now it became resistance, and the line continues. So at this point, what I saw was this breach. First we had this small accumulation. As you can see, the market spent 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days going sideways, and then in one day it moved this much. That was 24% move. As we discussed earlier, the plan of the market, this was in the second video, the plan of the market was to go from this point to this point. So it will not go like this. Instead what it did is accumulate for 14 days and then directly give the move in one day. So the first breakout was this. Then the second was, now this was the move. So this became the resistance. Clear? Very clear. I think this concept is clear. The market came down till here and then moved up to the resistance. So this became support. I think this much concept is very, very clear by now. So turn, this is resistance, turn, this became support. Now the market kept consolidating, the volatility kept on decreasing, and then we had another breakout which closed above our previous resistance and with bigger volume, above average volume. If you see, the average volume is this, we have a breakout. So at this point I was paying attention, and then we had this candle, a negative candle. But at this point, when we had this another breakout, so market moved something like this. So this was our resistance, because if we see on the smaller time frame, I'm not going in very deep. This is just to explain the concept of support and resistance. Then we had another breakout, and we had this breakout again from this level. Let me just show you for clarification. If you go to a smaller time frame, you could see that we had this accumulation, we had this move, we have a resistance here, another accumulation, we had another move, then this happened, and then we had another breakout. So at this point, I told in the Telegram that this stock could go to 11 rupees. Now why rupees 11, and how I could predict the market will almost give 100% return. We'll have to go back to the bigger time frame. Now we see this level. Now the market came down from rupees 11. Rupees 11 is our previous support, and this was our support because the market came down to this level and then turned like this. So this became our support and this became our resistance. The market kept coming back to support. We gave a breakout to the downside. Then we have this support here, and this is our resistance. Then the market kept trading in this channel. Another breakdown. This became our support. And we moved up. This is our next resistance. This became our support. We came down. This became support. We went up. This became resistance. And this was the resistance. This is resistance. And then we turned down. Then we went up and we had a small accumulation and we gave a breakout again. Now this resistance is already traded because, as you can see, we had a strong reaction from the previous support and resistance. So this was our initial support. The market came down and turned back. So that means that this resistance is no longer strong because it has already rejected the price once. So when the price comes to it again, there is less chance of it acting as a resistance again. This concept of support becoming resistance I'll explain in the next video. And then we had this breakout. Now why is the target 11? Because 11 was our previous support, and I think this move will continue till there, and we have our resistance here, and the market will come back to the ₹8 level. So let's see what happens. I hope that the concept of support and resistance is clear. In the same way, we have trend lines. So I hope everyone remembers what was the uptrend, what was the downtrend, and what was the sideways market, because the concept starts from there. That's why I made the video on those concepts in the earlier videos. So we have this uptrend, higher highs, higher lows, higher high, HH, higher high, HL, higher low, same thing, same thing. Now if we connect these, if we are able to connect these higher lows together and higher highs together, we get a lower trend line and an upper trend line. It is very, very easy concept. So we make a high, we make a low, and if the market is able to breach, we are in an uptrend, because if the market is not able to breach this, then we have our support. This becomes our resistance, and this becomes our support. But if the market is able to breach this, then what we get is an uptrend. Then we make another low. This becomes our trend line if we connect to the lower lows. Now people ask me that how many points should I see before, how many touches it should do to make a trend line. I say 3 at least, because 2 dots we can connect anywhere. If there are 2 dots, it is easy to draw a trend line anywhere. I can just join 2 points anywhere and make a trend line like this, or anything, something like that. Actually this is a valid trend line. If there are any 2 points, I can just draw any trend line. I can just do like this, or draw from this point to this point, anything. But I think the valid trend line is when we have a clear trend and we can join at least 3 points. So I'm not a big fan of trend lines. If you see my channel or ideas, I rarely recommend buying or selling based on a trend line. 90% of the trades are based on support and resistance, and I think that concept is more important. So it comes back down to the same principle of the uptrend, downtrend, and sideways market. In an uptrend, this is an uptrend, this is a downtrend, and this is a sideways market. Or sideways market could look something like this as well. So this becomes our trend line, lower trend line. This becomes our upper trend line. This becomes our upper trend line. This becomes our lower trend line. And in the sideways market, the first point where the market turned becomes our resistance, and the first point the market turned from the correction becomes our support. So I think by this time everyone has the idea of how to draw trend lines, how to draw support and resistance, what is an upper trend, what is an uptrend, what is a downtrend, and how much time the market spends in each phase. As we have seen, the market is spending most of the time in support and resistance. That is why support and resistance is very important, because after this the market will move very fast, because the target, as we know, as we discussed in the previous video, that if this share wanted to go from this to this level, let's go to a smaller time frame. So the market wanted to go from point A to point B, this point, let's say. and it took 18 March to 13 April. So let's say 15 days, for example. So it spent 14 and a half day just to accumulate, and then in one candle we reach the target. That is why support and resistance is very important, and I hope that everyone is clear by the concept and the very important concept of support becoming resistance and resistance becoming support. I'll explain in the next video. I hope everyone liked this video. Have a nice day. Thank you.